Previously, we discussed how to analyze transactions, what accounts are going up and down. We also discussed what an account is, which is just simply something the business wants to track. I've written on the board here the accounting equation. I expanded it a little bit, so I did assets equals liabilities plus capital minus drawings plus revenue minus expenses. Now, this whole section here, the capital, drawings, revenues, and expenses technically are part of owner's equity, but I'm just going to expand that out for purposes of this video. Let's go through and just analyze one or two transactions like we did last time. So, for example, let's say the owner put $10,000 into the business. And in that case, cash, which is an asset, is going up. And capital, which is a transaction from the owner, so the owner is putting something into the business, is also going up. And capital is its own account. All right, so we have assets going up, capital going up. Our accounting equation still works. We have 10,000 equals 10,000. Let's do another transaction. Let's say that we purchased supplies for on account. And let's say we purchased $1,000 of supplies. Supplies is an asset. So our assets are going up. And since we owe money, our liabilities or the accounts payable are also going up. All right, and so we should have a lot of practice doing transactions like this where we're analyzing the accounts and then we write it kind of in the spreadsheet form. The problem with writing the spreadsheet form is that it works well if it's just a few accounts here and there, but we quickly fill up the board, and especially if we have a lot of accounts like typical businesses. So some businesses that I've worked with have thousands of accounts. So imagine a spreadsheet with thousands of columns and trying to figure out what's going on, and when you're recording a transaction, just trying to find which column it's supposed to go in. And that quickly becomes unwieldy. So in accounting, we actually have a different method of doing it. And this is where we start translating our accounting into a language. We're going to learn how to read and write the accounting language. So the first step is to analyze the transaction. Figure out which accounts are going up and down. And then we are going to figure out our debits and credits. So debits and credits, they are not good or bad. They do not necessarily mean up or down. It depends on which account we're talking about, whether a debit makes it go up or down. Debits and credits simply mean left and right. So I'm going to draw, these are called T accounts right here, and we use them to learn about accounting because a T account has a left side and a right side. The left side is called the debit side. We abbreviate it DR, which seems a little strange, but 400 years ago that actually stood for debitor. We have since shortened it, but we kept the abbreviation DR. And the right side is the credit side, and we abbreviate that CR. And that actually stood for creditor 400 years ago, so it's debitor, creditor, DR, CR. We kept the abbreviations, but we shortened up the words to debit and credit. Again, simply, they mean left and right. Nothing more than that. So left side, right side. And whenever we have a transaction, when we say cash goes up, I'm going to create a T account for cash. So I'm just going to write cash up at the top. And then I have to figure out, do I write this $10,000 on the left side or the right side? of cash. And I happen to know that it goes on the left side. The other half of the transaction was capital. And when capital goes up, I happen to know that I need to write it on the right side or the credit side. And our other transaction, we're going to have to create another one here. We had supplies, which was an asset. And supplies going up is 1,000. And I happen to know if supplies are going up, I need to write it on the left side. The other account in that transaction was accounts payable. And if a liability goes up, I happen to know again that it goes on the right side. So some things that you'll notice when you're analyzing transactions, where to write it, if it's the left side or the right side, the debit side or the credit side, is so you'll notice that we always have equal debits and credits. That is one of the foundational rules of accounting, is that if you have a $10,000 debit, you must have a $10,000 credit somewhere. Or if you have a series of debits added up, they all must equal the number of credits that you put in. So total debits must equal total credits. What we're concerned about in this video is, how do I know which side to put it on? How did I know that cash goes on the left side if it's going up and capital goes on the right side? So that's what we're going to explore right now, is how do we know which side to put it on? Do I put it on the debit side or the credit side? Let's do one more transaction just to illustrate things. Let's say that we spent $1,500 on some advertising. So cash is going down $1,500 and our expenses are going up $1,500. In this equation, though, it's a minus, so I'm just going to put a minus here for $1,500. And when cash is going down, I happen to know that I put it on the right side to show that cash is going down. And here's our advertising expense. And I happen to know that when expenses are going up, or we have more expenses than we did before, I have to put it on the left side or the debit side. So I just wanted to illustrate an account going down. For example, cash. Cash went up 10,000, then it went down 1,500. And I know by looking at the left side and the right side of the cash account what's happening to the account, whether it's going up or down. All right, so let's now transition into, how did I know whether to put it on the left side or the right side? I'm going to erase these T accounts so I can illustrate a little bit of math. I have said before that accounting is not about math, and it's really not. We don't have a whole lot of math happening in accounting. It's a little bit of adding and subtracting, and that's mostly what we do. There's some multiplying and some dividing, but mostly adding and subtracting. And that's all we're going to look at right now. But I'm going to show you the mathematical reasoning behind debits and credits. All right, so we have our equation up here. Assets equals liabilities plus capital minus drawings plus revenue minus expenses. There's some pluses and minuses mixed up in there. What if I wanted everything in the equation to be positive? How can I change the equation so everything has a plus sign instead of some minus signs in there? So this is just some algebra. I can switch some things around. So I have my two minus signs. My drawings is a minus sign, and the expenses is a minus sign. So I can just move those two things over to the other side of the equation. So my equation now turns into assets plus drawings plus expenses equals liabilities plus capital plus revenue. All right, so we have a left side of the equation and a right side of the equation. Everything is positive. So left side, right side of the equation, kind of like what we're talking about with a T account. We have a left side and a right side. So if we are saying something on the left side is going up, we have more assets, the owner has taken out more money, or we have more expenses. How do we show that if it's on the left side of the equation? Well, guess what? If it's on the left side of the equation, we show it going up by putting it on the left side of our T account. So debit, or the left side, makes these things go up. So if my cash goes up $10,000, I put it on the left side to show that cash went up $10,000. What if cash went down? Well, guess what? It's just the opposite. The credit, or the right side of the equation, makes that go down. So if my cash went down $1,500, I'd say, okay, I put that on the right side of the cash account. All right, so by looking at the cash account and knowing that cash is an asset, it's on the left side of this equation. I know my debits make it go up, so I put it on the left side to show it going up. I put it on the right side, or the credit side, to show it going down. All right, so that's the left side of the equation. We can also do that for drawings and expenses. So if an expense is going up, I put it on the left side. If the owner has taken out more money, I put it on the left side of the equation. Now, with drawings and expenses, I rarely put it on the right side. We don't really have negative expenses. So most of your expense things are going to be on the left side because expenses pretty much only go up. You can't unspend money once it's gone, typically. So, but assets, when you're looking at an asset like cash or supplies or equipment, you'll see entries on both sides of the thing, and knowing that the left side, or the debit side, is things going up and the right side is things going down. All right, so those are the three things on the left side: assets, drawings, expenses. Debits make them go up, credits make them go down. All right, let's look at the right side of the equation. And guess what? The right side is exactly opposite of the left side. So if a liability or capital or revenue goes up, we credit that to make it go up. So if I have accounts payable, I have more accounts payable, meaning I owe more money. Let's say I owed $1,500, and I put it on the right side to show that it is going up. I owe more money than I did before. So $1,500, I put it on the right side to show that I owe more money. Or if the owner put more capital into the business, for example, the $10,000, the owner has more capital, so I put it on the right side to show that the capital is going up. Or if I earned some more money by doing some work, that's our revenue, to show that I earned more, I put it on the right side. If something is going down, for example, I pay off that accounts payable. So I owed $1,500. Let's say I paid off $500 of it. To show that it is going down by $500, I owe less than I did before. I'll put it on the left side. So if it's on the right side of this equation, credits make it go up, debits make it go down. So that's the left and the right. So the mathematical reasoning behind this, and why the debits always have to equal the credits. If an asset goes up, guess what? Something either on this side needs to go down, or something on this side goes up, right? So to make our equation work. So if assets goes up 10,000, either drawings or expenses or another asset goes down 10,000, so debits equal credits. Or if my cash goes up 10,000, something over here went up 10,000. So I would have a debit to cash and a credit to something over here. So that's the mathematical reasoning. If my debits equal my credits, I know the equation works. So I don't even need to remember this equation. I don't even need to remember how everything works in here mathematically. If my debits equal my credits, I am guaranteed to have this equation work, whether I know why or not. Debits equal credits, everything just works. Now, that does not mean that I did it right. I could have put things in the wrong account, but the math works. So as long as debits equal credits, the math works. Doesn't mean it's right, but the math works. All right, so that is the mathematical reasoning. There might be some other ways to remember it. You don't necessarily need to remember the math. There are several different ways that I use to remember this. All right, so another way is to just write out a chart. And this is the Allure method. That's assets, liabilities, owner's equity, which is capital in drawings, revenue, and expenses. Down here, I'm going to put debits and credits. So we know that debits, assets, if I debit an asset, it makes the asset go up. And credits will make it go down. Liabilities, well, we said over here, credits make those ones go up, so I'm just going to put a plus sign there, and that must mean debits make it go down. Owner's equity, meaning capital, well, credits make that one go up, and debits make it go down. At this point, you might be wondering, well, what about drawings? I don't see that in here. Drawings are like negative owner's equity. So if I take out a drawing, it's actually making owner's equity go down. So that's why I debit drawings, because owner's equity is going down. Revenue, we said, well, revenue appears on this side of the equation, and credits make that one go up. So I'll just put my plus sign here, minus sign up there. Expenses were over here. Debits make those ones go up, and credits make them go down. So you can do this. And I would highly encourage you, if you like just having this chart until you get a lot more familiar with it and it becomes second nature, just write out this chart and have it next to you while you're doing the homework. And eventually you will memorize it and it will become second nature to you. All right, so here's the math formula. If for some of you that are math-minded, you might prefer remembering it this way. If you just like a chart, write this out and have it next to you. I have a couple of other methods. And this is a mnemonic device, meaning it's just a phrase that we can use to remember this. And it's all elephants will, and I'll just put a dash here to separate the second phrase, love rowdy children. So all elephants will love rowdy children. So I have three things over here and then three things over here. The things on the left, these are assets, expenses, and withdrawals, which is the same thing as drawings, just another word for it. These three things, since they're on the left side, debits increase them. And credits, of course, would do the opposite. But left side, debits is on the left side, so debits increase those ones. And here on the right side, the credits increase. So if I'm saying my liabilities are going up, I would put it on the credit side of the equation. So L is liabilities. R is revenue. And C is capital. All right, so All elephants will love rowdy children. You can remember that phrase. And so assets, expenses, withdrawals, debits increase those on the right side of this phrase. Liabilities, revenue, and capital credits increase them since they're on the right side of our sentence. All right, the last one is I'm going to use my hands. So first of all, I'll have you raise your left hand, and I'm going to have you make the hang 10 sign. All right, so your thumb and your pinky extended, and this is my left hand, so it's my debit hand. Debits increase assets, decrease liabilities, decrease owner's equity, decrease revenues, and increase expenses. So you do have to remember ALORE, so A-L-O-R-E, assets, liabilities, owner's equity, revenue, expenses, but remember that. And now hold up your right hand, and we'll do just the opposite. We'll just hold up 3 fingers, and this is still ALORE, so credits, or my right hand, credits decrease assets, increase liabilities, increase owner's equity, increase revenues, decrease expenses. So if I can remember this, my left hand, my debit hand, and my right hand is my credit hand, so you can remember it that way as well. All right, so those are what debits and credits are in a few different methods of remembering what do debits increase, what do credits increase, and there's no such thing as a good debit or good credit. Debits aren't better than credits. They're just left and right sides of the equation. And what they do to an account depends on what type of account it is. They do ensure that if our debits equal our credits, that our accounting equation works.